MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Cave from thewealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, did you see anything in the new federal budget that's going to make a difference for Canadians, new home buyer Canadians, to get into the market?
What a story we have today. I'll tell you, Jim, within 10 minutes of the budget being released, being tabled today, the amount of commentary that's been out there, once again demonstrating the level of ignorance about a housing market, it has been astonishing. The amount of misreading of the consequences of the budget as it relates to housing, or even what they've got in the budget about housing, really just boggles my mind. I mean, these are people that are referenced all over the place. I mean, these are people where they're sought out for their expertise, and they can't even understand what has gone on or what is not going to go on based on today. So I've actually got the budget in front of me, Jim. I've got it, and I've got to scroll down to the improving affordability today, support for first-time home buyers. So what your listeners should understand is there is no support for first-time home buyers in this plan. There is no move to improve affordability. I think that your listeners, the ones that have listened for a while, would understand that, to me, affordability means your cost of ownership of a home decreases. The cost of ownership, or the expense of ownership. This budget today has done nothing to make housing more affordable. What it is going to spur on is a lot of false narratives about the housing market by the stakeholders that they will try to use to manipulate innocent young first-time home buyers, millennial, into making a decision they probably shouldn't be making. So as we go through the policy, Jim, I mean, the very first thing that they come out with is the irony, even in the title, first-time home buyer incentive. All of your millennial listeners out there have to hear the word incentive. Because in the real estate sales profession, that is called an inducement. And inducements, generally speaking, from coast to coast, are illegal. Inducements are so difficult to provide. You have to give pages of disclosure before you can induce someone in a real estate transaction. And here we have the government of Canada saying first-time home buyer incentive, or I'll say it, inducement. What they've done today, Jim, is they're trying to induce first-time home buyers to enter the housing market as housing prices are falling. The market is correcting. So let's say that again. The first-time home buyer incentive wants to induce first-time home buyers to buy a home today, which 3 months from now, on closing, will be worth less than what they paid for it today. That is what is written right in the heading of this policy. Now, when we look at the policy, we see two variables that have been included. One, the Canadian Real Estate Association is going to hate. The other one, the Canadian Home Builders Association, is going to think is good. Now, this is how it goes. The government is saying for if you make below $120,000 a year combined household income. So the two people on title earn less than $120,000. The government will become your partner in home ownership. Jim, in any other country, when the government is your partner, isn't there a word for that? I'm pretty sure it's called socialism, isn't it, Jim?
Or maybe bribery.
Or bribery. The government is going to go on title in one form or another with you on your home purchase. What first-time buyer in their right mind would want the government to be either have a lien or to be on title with their home? It is absurd. So they're asking you to buy a house as housing prices are dropping, and then they're giving you inducement to do it, which will allow them to be on title one way or another alongside you. They actually came up with a really fancy word for this, Tim. It's called the shared equity mortgage. A shared equity mortgage. And they actually cite how other nonprofit groups do this to help the lesser fortunate in our society enter a housing market. I think Habitat for Humanity comes to mind. What this does is, if you purchase a resale home, they'll allow you to buy it with 5% down, and they will give you an extra 5% to be used towards the purchase of the price. If you're buying a brand new home, if you put 5% down, they're going to give you 10% of the value of the value of your house as a shared equity mortgage. These shared equity mortgages, you don't pay any interest on. As a matter of fact, the way the policy is written, you don't even have to repay them, probably until the day you die and sell your house. Or trade up, I guess, if that's the case. This is what the actual policy is. Now, your listeners need to understand, the Canadian Real Estate Association is going to be really ticked off, because what this actually does is, which is the one line item in the whole 4 pages that I've read that actually is truthful, it will steer people towards the new home market. And as I've said on the show before, the new homes market creates jobs, and it is a stimulant to the economy. I mean, people have to live somewhere. You need a roof over your head, growing population, growing immigration rate in the country. We need to build more houses. So,
sure, and in Alberta, they got 5,000 or 6,000 brand new homes waiting.
Well, that's the way a housing market works. And the smart home buyer waits till the housing market is in that condition, and that is when they enter the market. Because they walk out there, Jim, like you just said, and they have 5,000 homes to choose from instead of one. And the one, if you don't buy it today, they're telling you someone else is going to buy it a second from now. I'd much rather be buying when I have a choice of 5,000 homes. Now, what your listeners have to hear is the most hilarious part of this policy. Let's forget about the resale altogether, because it's not going to make any difference in the resale market, and it's going to make an unusual change in the new homes market. What this means is first-time buyers are not going to go out and purchase a home for the same price they were going to purchase it for if they didn't use it, if they didn't have CMHC as their equity partner. What they're going to do is they're going to add that mortgage amount onto their purchase price and simply purchase a more expensive home. It only makes common sense and a good financial decision that is exactly what they would do, because for the last 40 years, that's exactly what Canadian home buyers have done, and they've been successful doing it. So to assume what they're instead going to do for the first time in history, Mr. Morneau believes for the first time in history, they're going to purchase a home for the exact same amount of money and actually have a smaller mortgage. And I would say call BS on that. Decades of housing data proves otherwise. Now it gets better, Jim. Let's explain this policy even more. What this does is, with a 15% down payment, you give 5, CMHC shares as your partner 10%. That means you have 15% down. Well, there's this magical thing with CMHC that when you have a 15% down mortgage, your CMHC insurance drops almost in half. So with 15% down, your loan premium drops from 4.5% on the total amount of loan that you borrow down to 2.8%. Now it gets better. Not only does your rate drop, but the amount of mortgage that you're going to be paying the insurance on drops by 10%. So you have an effective around 2.3% reduction in your mortgage insurance premium. They didn't talk about that in the budget at all. This is just the most hilarious idea that any government could come up with. It was not planned clearly. It is not even vetted in the budget. They're saying they're going to come up with the solutions to deliver it in the future. They are framing it, as I said, as an incentive to buy. And the other thing is, it's scheduled to start on September the 19th. So that means any home buyers that were going to buy in the summer months, July and August, probably are going to move onto the sidelines until September the 19th. Meaning those first-time buyers will not be buying in the summer. They're going to step to the sidelines. Well, as we've said on the show before, what happens to the average selling price when first-time buyers move to the sidelines? The average selling price looks like it went up. House price illusion, when really it didn't. Then when those buyers get back into the market in September, after the Canadian Real Estate or Association or someone else could have said, because we have to qualify it here. It's highly likely there are not enough buyers waiting right now to get into the market. Certainly not the numbers that the Canadian government believes are out there who are going to capitalize on this program. But in theory, it could be higher prices in the summer and then immediately plunging prices in September, right before the election. We can't make this stuff up. It's so good, Jim.
We'll have more with Ross Kay right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Ross Kay. Ross, could these incentives offered by Ottawa do the same thing as the Christy Clark $37,000 homeowner grant, where all it did was boost prices by $37,000? And in this case, could it boost the price of a house by 10%?
Absolutely great question. So what's different today in the national housing market, including Vancouver and Toronto, versus the beginning of 2017? When the $37,000 boost came in British Columbia. The cycle is at a different stage, okay? There are no first-time buyers left in the marketplace right now to fuel a rebuilding of the housing market. In 2017 in Vancouver, because of the house price growth that had taken place, there were still a few remaining first-time buyers in your marketplace. But there were not enough of them to create a sustainable housing market. In other words, your sales chain didn't keep going up. At the same time, the first-time buyers were buying condos. your single detached market was collapsing. So that just meant that the sales chain was not functioning properly. There were not enough of the new first-time buyers going in. Now, when the government releases the data to how many people actually involved in the program, if they ever do release it, then we can go back and double-check that. But we can't be sure. But what I can tell you is this: it will have no bearing in the market. Zero. It is a false promise made out to millennials that, in my opinion, is designed to get them to vote for the Liberals in the November election. I believe they want millennials to put pressure on the Conservatives and the NDP to accept this policy, because we have to say, are any of the potential millennials going to say, oh no, we don't want to have a potential $40,000 given to us by the government interest-free for our lifetime? I mean, that is a pretty foolish thing to think any human being would want to say no against. This is a purely political move, as is the modernizing the home buyers plan. So, Jim, that home buyers plan that has been around for decades, where you can use your RRSP money to use as a down payment for a home. And most of your listeners may have forgotten that RRSP money is repayable in 15 yearly equal installments over 15 years. And in the year you miss one payment, that payment becomes taxable income in that year. It's added to your taxes. So all of any benefit from the RRSP homebuyer plan is blown out the window. Your listeners should also ask, how come the government, this is a decades-old plan, how come there is not yearly data released on homebuyer plan repayment delinquency? How come no government, well, it was actually released once years ago, how come this is not a yearly release by the government? Well, why not? Because they don't want to tell you that people are not repaying their RRSP homebuyer loan plans. They're adding those years onto their income, and they're being taxed on it.
And just to let people know, the new budget has upped what you can suck out of your RRSP from $25,000 to $35,000. Again, is that enough to make any difference to a person looking to buy a home?
Well,
$10,000.
It's not going to make any difference, Jim, now, and because the people who are going to buy a home this year have already made the decision to buy. This year's numbers are set in stone. The government can do nothing to change this year's numbers. The way the housing market is as of now, the middle of March, is already dictated what's going to happen through the summer and the fall. That is already over. What this plan does would be for the next year. Will an extra $10,000, will home buyers put an extra $10,000 away in their RRSP and take it out in 2020 to purchase a home? That's the question. My question is, that's an extra $10,000 that you have to repay in the first 15 years you own your home. It is foolish. You should not be purchasing a home if that's the case. That's really where your TFSA should be used. Because with the TFSA, you can take the money out and put it back in at any time. There's no penalty for your lifetime, unless some future government changes the rules. RRSPs should not be used that way. I'll let your other financial commentators on House Street explain about RRSPs and TFSAs, the difference, and why one could be used for your down payment and why the other one should not.
Ross, would it have been better for the Trudeau government to reverse what they did when they were elected, where they had a $10,000 a year maximum cap on your TFSA, and they dropped it down to 5 if they put it back up to 10 Gs?
Right.
Would that help more?
That's what we talked about on last week's show. My move to improve housing affordability was to increase the TFSA. Not this crazy number or plan, increasing RSPs and coming up with a socialist program where CMH becomes a joint owner in your property one way or another. I mean, that's just the way it is. I mean, when I'm going through this document, Jim, this is the budget for the country of Canada. They have a chart called the impact of the mortgage stress test. They read this chart totally different than how I read it. I'm looking at a chart as I'm talking to you, and they have 5 different sets of values. Home buyers with new mortgages, so that means somebody who purchased a home or took out a new mortgage with a credit score with a loan-to-income ratio between 0 and 150%, 150 to 250, 250 to 350, 350 to 450, and 450 plus. 5 different categories. When I look at those numbers, I see the difference between the first bar, which is the third quarter of 2016, and the fourth bar, which is the fourth quarter of 2018. So the very first thing I would tell anyone looking at this chart, you need to look at the same quarters. You can't look at different quarters and compare the housing market, because the sales mix in those quarters needs to align with one another. When I look at this chart, they're bragging about the mortgage stress test reducing loan-to-income ratio. Well, it's not actually the stress test. What they actually are saying is that we are restricting the amount of money you can borrow. So it's not like it had the desired effect. What they really should be saying is, we're forcing you to borrow less money, and yes, look it, we forced you to borrow less money. They just don't frame it that way. We look at the numbers here, and we see, coincidentally, in 2018, the share of first-time buyers, or the share of new mortgages with a loan-to-income ratio of over 450, dropped from 20% to 14%. Okay, well, when you put in a mortgage stress test of 5.34%, you lower the mortgage coverage ratio, which naturally means your loan-to-income ratio drops. It is impossible to borrow money today to get a higher loan-to-income ratio. And then when you look at these numbers, you're going to see in all the other 4 categories, the share of mortgages increased. Well, what we would say is that's exactly what you would expect in the home trading cycle at the end of it, because that's when first-time buyers are at their lowest rate, meaning the number of people borrowing money at 450% of their income is at their lowest. Trade-up buyers, those between 350 and 450% loan-to-income ratio, they're growing. But the peak one is exactly what you look at the chart, the 250 to 350 loan-to-income ratio, because that is people who are borrowing a preset amount of their income after owning a home for between 18 and 24 years. This is probably their third home. That means all of the talking we've done on House Street is proven true just in this one chart, because it clearly shows you how the share of sales has gone away from first-time buyers, which naturally means the average selling price goes up. And that is how house price illusion is created. You have charts right there from the Government of Canada in today's inducement document that proves everything you've heard on House Street the last 2 years.
We'll have more with Ross Kay right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Ross Kay. Ross, NDP leader Jagmeet Singh on his second day in Parliament. Congratulations for winning your by-election in Burnaby. Mr. Singh says Ottawa talked about how to make homes more affordable for first-time buyers, but they didn't talk about affordable housing. Are there any measures in there that will help people with their rents or even find a place to rent that they can afford?
Actually, they've attempted to do things in this budget, but once again, it's a failed strategy, what they're using, Jim. I'll use this one initiative that they have where they're going to give municipalities $4 billion. So what they're saying to the municipalities is we're going to give out $4 billion across Canada to municipalities in a partnership to add to your housing stock. What they didn't do, Jim, is they didn't mandate a minimum property tax increase for the year that you're receiving any funds from the government, any of that $4 billion. Because they didn't attach a minimum property tax increase, don't need a maximum, but you do need a minimum. What municipalities do is they won't raise their property taxes. They will take the money from the government as a replacement to raising property taxes. They have followed this procedure for 40 years. Now, I guess maybe you need to go into the local municipal governments and sit there and listen to the debates and question how come property taxes have not maintained the rate that they need to maintain to keep your infrastructure built, to understand how this works. The government is basically saying we are going to fund part of the property tax base because they're not tying these funds to a minimum increase in property tax. Had it been us, we would have said, okay, you can apply for these funds as long as you have a 2.1% increase in your property taxes in the given year that you're applying. If you don't have that minimum, then don't bother applying because we're not going to give you the money to use for something not intended. This is a partnership. This is not an offset. So what Jagmeet is talking about there is it did not happen in this budget because politicians, that just as we talk about the home buyer plan, we talk about the Socialist CMHC program. They don't understand how things work. They have another initiative here expanding the rental housing construction. They already have a fantastic rental housing initiative financing. The CMHC runs a financing wing of their program for rental construction housing, which is fantastic. There is no need to touch that. They needed to do a better job selling it. They need to educate local politicians better in how to utilize it. They need to be flexible in how they handle use of the funds at the local level. But they don't need to say they're going to give another $10 billion, which will result in 42,500 new units across Canada, because it will not. The only way that you are going to have rental housing built is to create rules and regulations that allow the rental housing owner to make a reasonable profit. And I'll tell you, folks, we are in a low interest rate world right now, and it's probably going to last for a while. This is the prime time to remediate your housing stock, build affordable housing, redo your infrastructure, redo your rental housing stock, build your rental housing stock with long-term contracts. Make 20, 25, 30-year contracts for these developers, and you will have more than enough rental housing construction coming out of your ears. If you think you're going to incentivize builders and developers to do this, or even municipalities, you are simply mistaken. Incentives do not work. Sound, fundamental, long-range financial planning, if that means generating revenue from my rental, is what works. and that was not in the budget today. Now, I do want to bring one thing up for question, because there was one great feature in the budget today that I have not really noticed anyone talking about in the press or in social media. And that is what the government has done, is they're going to allow people involved in a divorce to reaccess their RRSP home buyer plan on a future purchase. This is a sensational change to the home buyer's plan. This is one of the changes that I would have made, again, decades ago, working with, and sorry, Jim, my bias here is for the women in the house who dominated, who frequently were the ones most financially harmed in a divorce situation when it came to the family home. Allowing a divorced woman to take funds out of her RRSP a second time to buy a home after the divorce is a sensational idea. Often in a divorce, the assets are split and the RRSPs are a key component of that. The RRSPs if the wife has been a homemaker and the husband has been out profiting from her staying at home taking care of the kids, he has to give part of his retirement plan to her, or at least the money on closing, which can become when the divorce happens, which becomes part of her RRSP program. This is a great way of basically no cost to the government to protect women in divorce situations where they still have the opportunity to be homeowners after the divorce. This is really good, Jim, because, literally worked with dozens and dozens of women over the years in these situations, and inevitably they were not in a good position. As a matter of fact, the local divorce lawyers here in town, which specialized on the women's side, used the K family as one of the primary real estate service providers for those women. This is a great move. Probably the only rational thing that I could compliment the government for in this, the housing portion of the budget. But I still got to go back and laugh at virtually everything else that they've talked about today.
Ross, I'm glad you could find something positive.
Hey, thanks a lot, Jim. I'm glad too.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. You're listening to HoweStreet.com Radio. Find us on Twitter @HoweStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com Radio is a production of HoweStreet Media Incorporated.